Hi guys, welcome back to another weekly analysis video. Kayong here from AlphaFleet. If you're the first time watching this video, alright, we'd like to welcome you, and what we do is usually release market analysis video as well as sometimes educational series. So do hit the subscribe button so that you get notified whenever a new video is being released. Alright, and for those who have been following us some time, we'd like to thank you for your support and encouragement. And you know that we are always welcoming feedback and any questions that you guys have. Drop it under the comment section in this video. Alright, so let's go into this week analysis itself. Alright, so the process is always the same week in, week out. We always look, first thing is what happened last week. Alright, so if you look into the events calendar for last week, you can see that overall the Euro PMIs, alright, be it in a particular country like German, Spanish, French, or even the overall Eurozone itself, you can see that the PMIs overall is in a positive territory. Alright, we can see on last Monday, all the data coming in above 50. Alright, and what you realize is that they beat the expectation as well. So it's generally a positive note for Eurozone overall. Alright, and if you go look into Wednesday, Australia CPI quarterly came in at 0.7, beating the expectation plus an improvement from the previous data as well. Alright, so this is a significant increase in the overall Aussie CPI. Economic wise, it's a positive note for Australia. Alright, and if you look at pound, UK side is also very interesting because other than the Brexit, other than the bearish sentiment on UK, the economic data are all positive. Alright, you can see the prelim GDP came in at 0.5. The previous data was revised upwards as well. Alright, up to 0.7. So it's a positive note for UK. And of course, Japan is a slight improvement in terms of the expectation. They beat it, alright, but it's still in the negative territory. For US, advanced GDP came in at 2.9, significant improvement as compared to the previous 1.4. Alright, so in terms of economic wise, it's all positive for the particular countries itself. Alright, so let's take a look at next week itself. So for next week, it's gonna be super packed. If you're trading, you definitely need to pay attention to all this news. Alright, so the first thing that you want to take note on for Monday next week will be the Euro core CPI flash estimate. Alright, this will be important because ECB is also tracking this as an inflation data, followed by in the US we have core PCE price index plus personal spending. Alright, this is significant because the Fed is using this to judge inflation. Alright, previous data is 0.2 and 0 for personal spending respectively. Expectation is coming in at 0.1 versus 0.5. So what we need is, of course, an upside surprise and beating the expectation to see dollar strength continue being supported. Right, so that's about it for Monday. Tuesday, we have huge data coming in as well. China Caixin manufacturing PMI, followed by Australia RBA rate statement and cash rate. There's no expectation that there's another rate cut for this meeting. Alright, but the rate statement is going to be important because that's going to provide some forward guidance as to moving forward in 2016 December, what's going to happen for the Aussie. Alright, of course, if it's a hawkish statement, we will see the Aussie being supported, and if it's a dovish side, we might see some sell-off in the Australian dollar itself. Alright, later part in the day, we have BOJ monetary policy statement as well. Again, from my experience, it's difficult trading the BOJ statement. Right, so what we'll advise you is to let this statement settle down and then only trade out of this statement itself, basically post release. Alright, don't trade before that and don't trade during it. Later part in the day, alright, we do have some minor one like US ISM manufacturing plus New Zealand GDP price index, alright, but because of the other, in relation to other importance and significance of news event, this too might be muted overall. Alright, so on Wednesday, we do have the first labour market data coming in from New Zealand, alright, employment change and unemployment rate. If you look at the expectation, analysts are expecting a slowdown in the employment change for New Zealand, but unemployment rate is expected to remain the same. Alright, this is going to be significant depending on what is the actual data coming in. Alright, and of course, later part in the Asian session, we do have inflation expectations from New Zealand as well. Alright, previous data was 1.7, and depending on what's the actual data released, this is definitely going to impact the New Zealand dollar. Alright, and of course, this is going to be giving some guidance as to whether the RBNZ is going to cut rate in 2016, alright, because that's definitely still on the table, so you need to take note of this data itself. Alright, later on Thursday, alright, we do have the FOMC statement. Highly unlikely the Fed is gonna do any changes in the funds rate to this week itself, simply because of US election, alright. But the tone of this statement is gonna be important, alright. Whether the December rate hike is still on the table or not, is definitely gonna shift the market expectation. Right, and that's going to directly impact your US dollar. So take note of that. Later part of the day, we do have the Pound Services PMI together with monetary statement from BOE. Again, this is going to be important, but you need to take note that with Brexit still on the table, market might not be, just moving according to the fundamental economic data, but it's really based on the sentiment and the risks on Brexit itself. Right, so take note of this monetary policy statement as well, because it's definitely gonna drop some clues as to whether BOE is gonna further cut rate or even stimulate the economy through QE and such. Right, so take note of that. And to end off the week, alright, we do have during the Asian session, Australia RBA monetary policy statement, plus the retail sales data coming in. Alright, this is gonna be important as well, simply because with earlier the week, alright, on Tuesday we do have the RBA rate statement, right? And this is the first piece of important data, the retail sales coming in to see whether it support the monetary policy statement. Alright, so this one is important. Right, and later part in the US, we do have the Canadian employment data coming in, expected to come in at negative 10,000. Right, analysts are expected a slowing down in the labor market for Canadian. Alright, but employment rate is expected to remain the same. Alright, so this is going to be significant, but because of the NFP and average hourly earnings coming in at the same time, this will be tricky because most of the traders will focus on the NFP and average hourly earnings instead of the Canadian employment data. Alright, so NFP is expected to come in slightly better at 175. Our average hourly earnings is also expected to come in slightly better at 0.3%. So again, similar case is that if the actual data comes in positive, better than expectation, we do expect the dollar strength to be supported. But of course, vice versa, if it comes in missing the expectation, missing the estimates, we might see sell off in the dollar. Alright, and this is going to pile up together with next week US election, because traders might not want to hold their positions into the US election, and they might exit their position, right, pushing the dollar further down. Alright, so all those things you need to take note trading into next week, because it's definitely important. It's definitely one of the most active week for the month. Alright, so having said that, let's jump into charts, and I'll walk you through again every week 3 potential setups that we are eyeing. Right, this is not signals. Again, a disclaimer: do not take this trade, just because we share it. But why we share it is due to educational purposes. Alright, hopefully through this sharing you get to understand a little bit of how we walk through what are some of the thought process, some of our trading plans, so that you learn it with the skill set and not just taking it off like a signal. Alright, so the first one I'll walk you through is New Zealand Yen. Alright, the play over here is, as I shared earlier, alright, we do have some key data coming in from Kiwi. Alright, and depending on how the data is going to play out, this trade might be a significant one, because we do still expect not expect, alright, we are still aware, right, the RBNZ has a potential of cutting interest rate again, alright, for the last time in 2016. Alright, so with that, our bias on Kiwi is definitely on the bearish momentum, alright, the downside. And you look at this particular chart, what's happening is price is inching lower, right, but it's not moving very significantly lower, alright, just that it's slowly moving lower and lower bit by bit. Alright, and overall what is happening over here is price in a range environment, alright, and that's where we start to zoom in to a lower time frame and spot for opportunity. Alright, in line with the overall fundamental and directional bias that we already have, we will look for a technical setup so that we know where exactly we're going to enter the trade and exit the trade if we are wrong. Alright, so if you look at this based on the range environment, we do have a pattern forming, an advanced price pattern forming. If we pull in our Fibonacci tool, alright, from the swing high over here to the swing low, you can see this retracement come in slightly less than 61.8. Alright, but it did touch the 50% Fibonacci retracement. Right, and that gives us a valid pattern completing at the 88.6 Fibonacci level. Right, so if I draw in the triangles to show you how this bat pattern looks like, it looks like this, alright, and it completes at the 88.6 Fibonacci level. Right, and if we start to put in some Fibonacci to find more confluences, alright, from this point to the previous low, to look for an extension. Alright, we do see a 1414 extension coming around that region as well. Alright, so this is where we start to see some confluence coming in. And if I drop in a horizontal line, alright, and I just zoom out to show you what is the previous structure over here. Right, maybe on the daily time frame will be all clearer. Right, we do see some minor one, not a significant level, alright, but we do see some level, some areas in which price has reacted in the past. So this is not a significant one, but if you compare it in terms of fundamental, alright, and directional bias, it's definitely towards the downside. Alright, so what we are waiting for is for price to come up higher, hit the 75.65 region, right, and we'll be looking for a short opportunity. Of course, having said all this, we will gonna be monitoring the market, the fundamental release, the economic data release closely as of next week, sorry, to see if we're gonna pull the trigger to short this particular trade. Alright, the next one I'm gonna share with you is Aussie Kiwi. Alright, if we go over to the daily time frame, we can see that it's in the down move, right? But previously it has moved higher to test this previous resistance once, alright, rejected, come down, and then retest another time, and it's coming down again. Alright, so if we go into 4-hour time frame, alright, on the 4-hour time frame is still valid in terms of an uptrend, right? But we are taking note that over here is a significant resistance on the daily time frame, right? And we start to then build our case to see if we have any opportunity to take in this trade. So we take our Fibonacci pulling from the recent low to the recent high. Right, we do see that price comes in within the 50% Fibonacci retracement. Right, and that gives us a valid advanced bat pattern as well. Alright, from here X to A to B, and from B to C, and then back down to D. Alright, completing at 1.0505 area. So again, same process, we drop a horizontal line, we like to look for extension confluence, again 1414. If we go out to a higher time frame to check, right, we do have some very nice confluence in terms of structure level over here in the past. Price reacted over here as well, a very decent rejection up here, right? So again, this play, alright, trading this currency pair is a little bit tricky because you're trading Aussie and Kiwi. The first thing you need to note is Aussie and Kiwi are slightly correlated, alright. Simply means if Aussie strengthens, Kiwi has a tendency to strengthen as well, but it's not all the time, alright. And if you look into next week events calendar, you realize that we do have a lot of Aussie data plus Kiwi data. If you do see a divergence and this play, alright, this setup might play out very nicely. So again, do not follow, do not take this trade blindly just because we send it out as a potential setup, right? But always take note as what are some of the top process going in and what is the story behind this trade setup itself. Okay, so level to watch is at 1.0505 for this particular pair. Alright, the next one is, the last one I want to share with you in this video is Chef Yen. Alright, this is going to be interesting because we have one question asking whether we can jump into this trade straight away. Right, so let me walk you through the whole process again. It's always the same process. Price is in the downtrend, alright, but recently it's been in a consolidation. Okay, so again, our bias here is downwards. Alright, so we start to build our case to see if we have any potential setup. Alright, over here we do have a potential sharp pattern. Alright, so I'll draw it in to show you how it works. Okay, from X to A to B, and then B to C, C to D completion at the 88.6. Alright, so you can see that price is very close towards the 88.6. Depending on your broker, some broker might have touched that level, some might not have. Alright, but doesn't matter because what we are trading is not, that level, but it's really the area. So once price enter the area, it's considered, entering that zone. And again, same process. If I drop in a horizontal line, this is going to be very important because if you look at this is a very significant level. Previously, price reacted here, here, 2 times, 3 times, and now 4th time testing it. Alright, so this is going to be significant, and of course, we have traders who start asking, since this is completed, can I short the market on Monday? Right, if you short it, right, you'll be entering over here. Alright, at 106, you're actually risking an additional 20 pips. So my answer to that is yes and no, depending on your trading plan. Alright, and of course that bring us to the next topic of the importance of trading plan, etc. But I'm not going to go in depth into it in this video because it's definitely going to be very lengthy. But it's one of the topics that we're going to talk about in tomorrow's webinar. Alright, so if you are interested to it, tune in to our Facebook page. We'll be sharing a little bit on the live site tomorrow, alright, a Facebook live video. But let's get back to this topic as to whether can you enter a trade on Monday because of this completion. Alright, so my answer to that trader is that you need to have a plan to do that. You need to follow your own trading plan, whether your risk profile allows you to just fire a trade off on Monday morning because of the completion or not. But I'll share with him that one technique you can adopt, alright, is because this is a 4-hour setup. One technique you can adopt is actually to go down to a lower time frame on H1 to find if you have any smaller or alternative methodologies or trading plan that allow you to take this trade. Alright, so we do have a diverse methodology that we teach over here in Alpha Play. Right, so one of it is definitely looking at divergence. Right, so you can see that price is printing a higher high, but if you look into your RSI, it's actually losing steam. Right, it's actually printing a lower high. So this is what we call a divergence. Right, and the next thing you want to look out for in divergence is that you naturally will have a neckline over here. Right, so what you want to wait is for price to break below this low to confirm that yes, this divergence has completed and price is turning. Right, so what you want to wait for is price to break below this. Alright, and start to show some form of retracement, and that's where you start to see, oh, can I get in this retracement because price has break the previous low, right? And now it's showing sign that it's transiting into a downtrend, all right? It's building up its bearish momentum. So can I get into this trade? So that's where you pull in the Fibonacci from the recent high to where price ended, right? And you look for that retracement towards the 61.8 Fibonacci level. Alright, for an opportunity to take a short. Alright, and if you take this short, your risk is definitely going to be smaller because, let me just put in this too. If you short it over here, your stop loss just needs to go slightly above the previous high, alright, over here. Alright, and your target can be still based on this huge pattern that you identified on H4. Alright, and because it's an advanced price pattern, your target, alright, is based on Fibonacci. First TP will be at 38.2. Let me just remove the other line so that it becomes clearer. Alright, so again, I'll pull in Fibonacci 2 from the recent low to where the completion of the pattern is. The first target we'll be looking at is 38.2, and the second target we'll be looking at is 61.8. Right, so again, if you base on this trade, your risk to reward for your first trade is just about 1:1. Right, you might want or might not want to take this trade. All right, but if you go for target 2, you can see your risk to reward is 1:2. So that's a very decent risk to reward setup. Alright, so just to share with you, one technique that you can do, if H4 time frame is too huge a time frame for you to trade because of your stop loss needs to be wider, etc. You can actually use a H4 pattern, a H4 setup, and then drop it into a lower time frame to spot for better opportunities to take the market, alright, to trade the market that's up. Right, so that's it for this week's video. Alright, it's slightly long because we do have more things to talk and share with you guys. Alright, but again, if you have any other questions, alright, feel free to drop it in the comment section below in this video, and I'll talk to you in next week's video. Alright, always manage your risk and trade according to your plan, and I'll see you guys soon.